A buyer's exposure just outgrew the discretionary credit limit, and a shipment is scheduled in 2 weeks. The coverage on that next order can no longer be self-approved. It now requires a specific decision from the carrier. This is the process we're walking through today, requesting a name buyer credit limit, and what it actually takes to get one approved before a shipment date arrives. A buyer lands outside the discretionary credit limit in one of two ways. Either the buyer's size or trade volume grows past the DCL's threshold, or the carrier tightens its DCL criteria after a claim or a shift in sector or geography risk appetite, pulling previously covered buyers outside the ceiling without any change on our side. Either way, the outcome is the same. Coverage on that buyer moves from something we self-approve to something the carrier decides on individually. That is a process change, not a coverage denial. The buyer has not become uninsurable. The decision has simply moved to the carrier's underwriting desk. Carriers evaluating a name buyer request are looking for 4 specific things: buyer financials, audited statements where available, management accounts where not, trade references from other suppliers showing how the buyer behaves with creditors outside our own book, documented payment history with us directly, not just a public credit score or bureau signal, and a specific requested exposure amount tied to actual or forecast order volume, not a round number chosen for convenience. Each piece tells the underwriter something different, and together they form the actual basis for the decision. The single biggest driver of how fast a request gets approved is not the size of the ask. It's whether the file is complete on the first submission. A complete file with all 4 elements in place and an exposure figure tied to real volume typically moves to a decision in days. A partial file generates follow-up questions from the underwriter, and every round of questions adds time we may not have before the next shipment. Timing changes the entire experience of the request. A reactive request, submitted after a shipment is already scheduled, compresses the timeline and limits our negotiating room. We're asking the carrier to move quickly on an unfamiliar buyer with a delivery date already fixed. A proactive request, surfaced during routine AR to limit reconciliation before the shipment date is set, gives the carrier room to ask questions and gives us room to answer them without a shipment sitting on the other side of the decision. Name buyer requests should not be a surprise. They should come out of the same AR to limit reconciliation we're already running as part of ongoing program management, flagging buyers approaching the DCL threshold during routine review before they actually cross it. Treat the name buyer request as a standard line item in renewal preparation and mid-program monitoring, with the file already assembled by the time it's needed. We work with exporters to assemble name buyer request files before a buyer outgrows its discretionary credit limit, and to manage the underwriting conversation once that request is submitted. The full breakdown of what goes in the file and how to time it is in the blog linked below. Reach out if you want help getting ahead of a name buyer decision instead of requesting one under shipment day pressure.